in today's competitive business landscape, leveraging external financial advisory, so EFA as it's referred to, and data analytics can significantly enhance your company's success. This masterclass will delve into how EFA can provide expert guidance on financial planning, valuation, and strategic decision-making, ensuring your business is well equipped to navigate complex financial challenges. Led by Colin Wenngatz, MMP's National Leader of Data and AI, and Cam Bawol, Director of Business Development, the session will demonstrate how integrating data analytics can transform raw data into actionable insights, optimizing operations, enhancing customer engagement, and driving growth. Ultimately, this combination empowers businesses to make informed decisions, streamline processes, and achieve sustainable success. So without further ado, thank you, Colin and Cam, for joining us today.
Awesome. Thanks, Simon. It's a pleasure to be here, and thanks for all putting this on and all the hard work and good things that come out of this week. Thanks in advance for the drinks, Rishi and McLeod. Looking forward. We'll be there tomorrow. So if anyone wants to talk with us, we will be there. Kick this off. So Masterclass, Leading with Financial Intelligence. Colin and I are really excited to work on this together as we've had a lot of collaboration between our teams and together, and some of the stuff we've done with some real life examples we'll show you later. So introductions, Cam Bawol, Director of Business Development in Calgary. So what that means is trying to add value to our existing clients and get new ones and create some value for them that way with the service lines and experience and networks we have at M&P. My background, I think I've worked in lots of service lines, so starting from assurance, spent some time in industry, and then worked 8 years in corporate finance and our external financial advisory services that we'll talk about later. Colin, introduce yourself, please.
Perfect, thanks, Cam. So Colin Wenngatz, partner based here in Calgary. Been with the firm for about 13 years, and I have a bit of an interesting background in the sense that you'll probably notice I'm not a CPA by background. I've lived at this weird intersection of corporate strategy, finance, and data and AI for the better part of the last 20 years. Spent the formative years of my life with a large retail organization based in Toronto. Spent about 8 or 9 years there, and then joined M&P back in 2013 to build out basically what we call a financial analytics practice. So it was this merger of how do we utilize data, how do we use insights, how to use, at the time it was big data. This was when the concept of generative AI is not where it is now, and machine learning to drive some of the insights and drive decision-making around finance. So tying a lot into M&A and those sorts of things. So really excited to share a little bit around that intersection. So I'm going to come at this from a slightly different perspective than maybe you've heard before, which I hope is okay, but hopefully adds a little bit of insight around how we think we can merge what you're seeing from a technology perspective, what we're seeing from a corporate strategy perspective, be that M&A, be that managing liquidity, et cetera, and then all underpinning that through a concept of technology and AI.
This is pretty sensitive. Okay, we'll go on to the first slide, so let you.
Sure, I'll jump in with this one. We'll get this figured out, don't worry about it. So we titled the talk From Complexity to Clarity, and this is something that really, in my mind, really underpins the value proposition of finance. When you talk about what finance was 15, 20 years ago, even 10 years ago to a degree, it was that, trusted historian. I'm going to tell you what happened last month, I'm going to tell you what happened 6 months ago, and we're going to tell you around, here's how it impacted your financials. I know something that was said earlier is when you think of financials, financials are the outcome. They're not oftentimes the driver. And so what we want to really do is draw that relationship back to say, how can you use financial intelligence, business intelligence, data, analytics to start drawing that correlation between your operational effectiveness, what's happening at an operations level, and then what the financial outcomes derived from that are. So really looking at finance as a strategic driver, not necessarily the outcome, but somebody who has direct influence into driving strategy, driving change management, driving business model development or shifts in your business model. So really looking at that overarching perspective.
All right, so what is external financial advisory? So a lot of people in layman's terms think about it as, or you can think about it as fractional CFO and fractional controller type work. I like to explain to clients that it's usually 3 buckets. So you got your bookkeeping or accounting processes, you got your financial reporting processes, which is typically done by your controller, and then you got your executive leadership finance functions. So that would be your CFO, VP Finance, Director of Finance, that type of role. So we can fill a portion or fraction of all 3 of those, or And basically, we fill skill set gaps and resource gaps in this service line. So some of those situations, so just financial reporting on a monthly basis, maybe for lenders, stakeholders, investors, a lot of budget and forecasting work, which probably ties into a lot of this financial intelligence session today. And so I won't read all of those, but that's kind of the overlying or underlying services that drive this service line and the different levels. Sorry, go back and forth, not up and down. Back and forth, okay. And so the point of this slide, as Colin mentioned a little bit, or alluded to a little bit before, is this evolving from a trusted historian. So instead of just being the scorekeeper and telling the story of what's happened in the past with the numbers and results of the business, to move forward into the strategic or through those 4 sections into strategic guidance. So compliance is basically, you're at the point where you want to file your tax returns on time, you want your financial statements done. Maybe you're doing some monthly or quarterly financial statements to look at with management, and you want to be compliant with all your regulatory legislative requirements. Next level, businesses are starting to look at their financial results a little bit more seriously. Probably some KPIs. They're probably doing a budget at the start of the year and comparing that as their year progresses and looking at where they're at compared to where they want it to be, and starting to define some of their financial metrics. And then the next one starts to get really exciting. This is where we typically jump in with that external financial advisory service. Is we're starting to marry those financial and operational KPIs. So we're really working with the management teams or ownership teams on what the KPIs that they do every day in the business, the operational ones, and how that eventually drives the bottom line or the really important financial ones. If we have 4 or 5 months where we're just reporting the financial KPIs without really driving into the operations, we don't see the engagement from the ownership groups and people working in the business every day. So this starts to see a lot more engagement. And then the strategic guidance one is the most exciting. That's why Colin's here, so I'll let him jump into the big league.
I think when we talk about growth or using finance as a catalyst for growth, I think what you see in the first 2 sections there on compliance and summary analysis really are basically table stakes, right? How do you substantiate what's happening in your business? How do you understand what's happening in your business? When you start to shift to the right-hand side of that spectrum into business advice and strategic guidance, you're really now we call it compliance to reliance, right? So how do you go from just being a compliance exercise to saying, I need to look at my financials and I want to run some basic KPIs, to really saying, okay, from a financial or from a strategic perspective, what are the right financial drivers? So using an example, summary analysis is probably where the vast majority of organizations are right now. So I can look at my financial statements, I can go, here are the KPIs I have related to liquidity. Right, that's a major issue typically in a lot of early stage companies or growth stage companies, is how do we manage liquidity on a day-to-day basis? Summary analysis is saying, here are my key KPIs. When we get to business advice, it starts to say, here are some of the drivers behind those KPIs. So if we're struggling with liquidity issues, we're struggling with working capital, or we need to assess working capital, we'll shift that conversation to say, not only here are the KPIs and here's what's happened traditionally, it's that forward-looking perspective to say, okay, well, here's the drivers at an operational level that may be driving some of those liquidity issues. And the strategic guidance is the next step of the equation. What do we actually do about it? What do we do? What do we have to change inside of our operating model? What do we have to change inside of our business model, inside of our day-to-day operations, inside of the way that we are funded, to actually be able to drive that next stage of the conversations to be strategic? So we look at a growth catalyst. The growth catalysts are going to sit in those second 2 areas. Really, again, shifting that value proposition, for lack of a better term, within what finance actually does within an organization. So we spend a lot of time with our clients in that space going, how do we shift people, especially from phase 2 to phase 3? That's usually where you see the biggest leap in capability and the biggest leap from a strategic growth perspective to say, how do I substantiate that next phase and what I'm trying to accomplish? I like this slide. I had the opportunity to speak at our firm's AGM last year, and I used this around kind of financial intelligence. This is actually a marketing quote, so Jay Baer is kind of a growth consultant if you want to look at it that way. But I like this comment just because I think it really underpins a lot of what we're seeing. So if you're a growth stage company, you're really looking at this and saying, I have a lot of data at my fingertips, be that external data, be that operational data, be that statistics around my financials. But what we really see with a lot of organizations is this struggle to say, what does that actually mean? So I have a whole bunch of data points, but what do I actually do with them? What does that mean for my day-to-day business? How does it change any behavior? So if I talk about KPIs that tell me what's going on to the KPIs that are going to drive changes in my behavior, changes in my organization, changes at a leadership level, this is really, I think, from my perspective at least, a quote that I always like to fall back to anyways.
So digital finance strategy to enable growth. So this is where this is what we're actually doing with the technology to go through those phases on that previous slide we were talking about. So figuring out what the process is, the people needed, the model, and the data required to go from essentially just doing your compliance in your finance and accounting department to extracting the value of that data and using it to actually make some decisions, hopefully creating some more value for your enterprise. I think that's all we'll say on that one. And then same idea here, driving strategy through those through the data. Basically, this is kind of the key trends or key elements we're looking to achieve. So critical trends, profitability, predict and forecast, make it fast, and have some strategy behind it. So we look at all of those things and really map that out at the start of the engagement of where we want to go down the road, and make sure we understand the inputs that go into all of those, and make sure we're getting the right data and sanitizing it, so eventually the outputs are reliable and giving us that direction for the strategy in the quickest way possible.
So if you want to hang on that slide for a second. One thing I just want to add to this too is when we talk about critical trends, one of the big things in business we find from a financial perspective is not only understanding the current situation, but where you came from and where you think you're going to be. And so when we talk about data, this can be data related to your operations, this can be data related to the demography of your clients, this can be data related to your cost base and your cost segmentation, your customer segmentation, regardless of what you're measuring or where you're at. The big thing is just understanding what trend you're working on. What direction are you shifting? So it's one thing to say, here's where I am. One of the areas we've spent a lot of time focusing on is benchmarking. So we'll benchmark between organizations, but we'll also benchmark internal to an organization over a period of time, just to help understand saying, are we moving the right direction, right? It's always hard to look at a data point and add any context to it, financial or otherwise. And so we'll really focus on that from a measurement perspective. And it also allows us, in a lot of cases, when you start looking at this as, I don't like the word data-driven. You oftentimes hear organizations saying I'm data-driven. I'm not a big fan of that. As a data person, I go, it's data-enabled, right? Like I want to use it. I don't want to let it drive me. And so how do I take those data-enabled decisions to really foster the next stage of what I'm trying to do? You look at things like we dealt with a lot of organizations that go, how do I deal with tariffs now? This came out of nowhere. I've got to adapt really, really quickly. I've got to address the situation. Well, if we know and have all those insights at our fingertips, we're able to be really agile and very nimble about how we address that. Same thing with interest rate changes, capital calls. There are a whole bunch of kind of financial metrics that we would typically want to be able to adapt to really quickly. And I think if we have a lot of those insights at our fingertips as an organization, it allows us to be much more successful in kind of shifting that conversation and adapting our business model accordingly. So I don't know if we have a microphone, but maybe I'll throw it out to, from your perspectives, where are you using data and analytics and insights, I guess, in your organization right now? This doesn't have to be entirely finance. We're obviously looking at this through a financial lens, but maybe if anybody has any context around where you're using this now from maybe a strategic planning perspective or elsewhere. Everybody all at once. I thought I recognized you. Well, you've heard me say this a few times, hey?
Yeah. I think cost and price engineering. Thanks. So I said cost and price engineering, especially with, over the last couple of years with inflation and prices changing, and so just watching the fluctuations and seeing where we're actually doing deals and what customers are actually paying for, and
Yeah. Absolutely. Anybody else?
Any others?
It's a good question. Did everybody hear that?
Like is anyone using this for culture, for data analytics and insights for culture?
Do you mind if I ask in what capacity?
Sure, do an annual culture survey.
Okay.
Nice. Okay. Perfect. Anybody else? I'm going to start calling all my MNP colleagues if we're not careful. Bill? Perfect, thanks. So I'll shift the question maybe a little bit. Is there anything that you're not seeing that you think is important from a business driver perspective? So if I had this, it would enable me to make this decision more effectively. So I know, going back to your comment on cost and price engineering, that's huge, right? How do you price your services? How does that change? How does that change demographically over time, physical location, et cetera? I know we're going to share a few case studies a little bit later that touch on a few of those examples, but maybe I'll put that out. Is there anything that you would look at and say, if I could see this or understand this, it would help me make a decision around my business model? Yeah, of course.
So I own a fractional HR firm, and I find that and I would assume it's the same sort of on your end. How do you get people to actually think of their strategy first before they ask for their dashboard and what's important for their KPIs? How do you get them to take a step back?
It's a really, really good question. I think that's somewhat and Cam, feel free to jump in on any of this. I think that's somewhat dependent on the industry too. We find some industries are just, right away, get me to the data, get me right to that level. I think a big part of it is we try to focus on saying, what are the outcomes you're looking to drive, right? So it's great that I want to understand my, liquidity ratio or my debt to equity ratio or those sorts of things. Why? What are you going to do with it, right? So it's one thing to say, hey, I want to break down. I had a really good conversation with an organization recently. They're like, we need to be able to break down our cost basis and we need to break it down by product and geography. What question are you trying to answer by getting to that information? Otherwise, you're creating a whole schwack of dashboards. We were working with a company recently and they had, I think it was 187 dashboards. Vast majority of them nobody looked at because it was exactly that same thing. I want this KPI. Why? I have absolutely no idea. I just want to look at it. Then you end up getting to this place where it's like this paralysis around decision making. So I think it's finding that fine line.
We did a dashboard for a company that was basically trying to do, they wanted the results for compensation. But the scenario was there's numerous divisions and some were naturally more profitable than others. So the ones in the higher profitability wanted to get paid more, and the ones not, they didn't want that to be illustrated. But it was interesting because to go to your strategy comment, everyone kind of knew that's what would happen in the fighting or in the room after you announced the data and just showed it in front of everyone. But what the dashboard turned into is there was a lot more thought put into and it resulted in a lot more understanding of how the intangibles on some of the less profitable divisions worked. So they did kind of transform that dashboard into a pretty positive cultural change that probably we didn't recognize at the start and they probably didn't think was possible either. So I think just having those discussions and then talking about those results, that the value is always after the data's put in front of you. Len, you had something? Yeah.
I was just riffing on that question. What if the strategy is to see where the data leads us? For example, did you know that the people most likely to leave your company are the ones that are living the furthest away from your location?
Yeah, it's a really interesting example. So I'll go back many, many years. I was with a large retail organization, and we had a major competitor move in from the United States. And what I was tasked with at the time, because I was in our corporate strategy team, was help us understand the business impact this is going to have to us. Overarching question from the board. Just answer that question. The problem we got to is there's like 97 different externalities you can look at. And at some point in time, you just get stuck in this analysis paralysis. So I think it's okay to say, let the data drive the decision, but with regards to what? Like, you can't leave that as an open-ended question and just say, the data's gonna tell us what we need to do next. Because the data can't drive a strategy. And when you talk to a lot of, or at least the senior leaders I've spoken to that I've seen a lot of success driving this, they will have an understanding of where they want to get to. The data will help them understand how to get there. So for example, if I want to drive a big growth strategy, or I want to understand where I want to be demographically or geographically, the data will drive that decision. But you can't just go, where do I want to grow? That's not a question that I think the insight is really going to help you with. It's too generic.
I think you hit some of the answers to the question.
Yeah.
Data is only needed for decisions. So what are you trying to decide?
Yeah. Data, I will say this, I say it all the time, data is nothing more than an enabler. Right? That's where it ends. And I think that's where we, when you talk about using it as an input to strategic decisions, and we talk a lot with financial organizations, it tends to fall in one of two camps. Finance is oftentimes viewed as a very definitive strategic driver to the organization, or it's viewed as a compliance exercise. We do it because we have to do it, or we do it because we just need our monthly financial statements and a couple key KPIs. What I think we're trying to illustrate, Cam and I, is that it's the former that truly adds value. It's the latter that really kind of creates this bifurcation in your organization to say, we're not really going to pay attention to that other than the outcome.
Maybe I'll just add to the narrative that's going on right now. I find this really hard, actually, as someone who's from the healthcare space, doesn't self-identify as an entrepreneur, even though I started something, and growing, and I feel like I constantly am trying to figure out, and it's to validate, I think what you're saying is that as a CEO and a co-founder, you actually need the data to be able to figure out at what pace are you gonna do things, or do you have to push back on a different area to be able to do those, like the forecasting, the scenario planning, all this stuff. And so to some of the comments earlier, where have you seen successfully startups bring this forward to their team? Like, at what level of transparency have you seen work really well, I think, is something I wonder about. And then maybe for a purely MMP, like BD opportunity, like, are you saying that your company can actually support with all of these areas as well, or just a couple of these? Because personally, I feel like as a startup or a scale up now, I've really struggled, with bringing fractional finance onto our team. Tried to hire our accounting firm to be, external CFO. Tried to bring in part-time financial controllers, and I feel like I'm constantly asking, can someone pull up this report, but it's not automated, and it's like we're redoing the process every single time. So just saying, it actually goes to the question I asked in the other room. It was where do you start? Because when you're actually in a scale up, you're cleaning up your finance because you've grown millions of dollars more. You're cleaning up your culture because it's a new team too. So where do you find the ordering of that? So that's for anyone else to answer too, but just to validate some of the comments, but ask how to find the balance on transparency.
Yeah, it's a really good question. I really loved the session that we had right before this around kind of that. There's a lot around empathy and organizational culture and that sort of stuff. And I think that I come from a bit of that background, and I found that we were actually chatting about that during the session, saying how important that is from a leadership perspective. So where we've typically seen success, especially for growth stage companies, is around that customer insights piece and starting from there, because it's really top line focused, right? Say, how do I grow my top line? How do I grow revenue? Where am I actually growing? You can get into hardcore cost engineering or operational efficiency, and we've done all of these for sure. But we typically tend to start with definitely forecasting and projections, because you want to manage risk. That's huge. You want to be able to do some customer or client insights. That's huge as well, because that's going to help you understand how to grow top line. And then from there, you adapt and grow. And every organization is going to look at it a little bit differently. Every leader is going to have a different perspective on how much they want to spread out some of those insights. And it depends on the organization. Who do you want to empower? What are the departments that are driving your strategy? Who are the leaders that are engaged? So it's hard to give a definitive answer, but those are the two areas I would say we start the most, is customer insights, and then some of the forecasting and scenario planning. And I know Bill touched on that a little bit. And you had mentioned this concept of bringing in like a fractional accounting firm or something like that to help. This is one of the reasons I work really closely with Cam and calling out Bill, the gentleman who was speaking earlier. So Bill is one of our tax partners. Bill and I work together all the time. And a big part of that is that combination of technology, data, finance, because you need that core enablement capability, not just a transactional capability, right? And so we try to bring in everybody. Bill has a ton of skills that I can't bring to the table. Same with Cam. And I'd hope to say vice versa, but I'm not sure. Bill may choose to disagree.
I'll give that one to you.
Thanks.
The other point there, that really important point you brought up, is a lot of times we are talking with the owner of the business or the management team, and that question of transparency comes up. So what we're usually mindful is like, okay, well, the data that from the management team can see or the ownership group can see, you can still build on those reports or those dashboards, and then sanitize that the further down you go in the organization on what you want to share with those people. So you can have that scenario where it's basically one report, but it's different segments go to different people. So you do keep some data clean, and you don't want to go into the problems of sharing some of those metrics with certain people. But yeah, our goal would be to not repeat and duplicate work. That's the whole point of getting out of the scenarios where you have 50 different spreadsheets because of that issue. So yeah, I'm really glad you brought that one up.
Sorry, just the gentleman had a question back.
Yeah, no, I guess
He's got a loud voice.
more of a comment with an opinion. So I guess we're not a startup, we're an IT company, 20-ish years, and we have engineering type people.
Yeah.
And data and analytics are really valuable, but it also can be a double-edged sword sometimes. I would find that sometimes my history, the numbers can manage you if you let them get away from you. And sometimes, because people have different perspectives, correlation doesn't equal causation. So sometimes you can see something, you may think it's this, but it's not. Sometimes taking that moment to reflect and not to get worked up on it, use the intuition behind it in the analysis rather than just purely looking at the numbers.
Yeah, and I think that ties very much to what you were mentioning at the onset. This idea of saying you can't let it drive your strategy, it's got to be an enabler of your strategy, right? You can't just open-ended ask, what does the data tell me? It's a really dangerous perspective. And it is that from an AI perspective too, like if we start to get into the really techie conversation, you need to have a strategic direction as an organization first. And then you let the data kind of enable you or support you from a financial perspective. And so it's a really, really good point. Again, data enabled, not data driven. That's why I never really like the term data driven, because it sets the expectation that the data is driving the car, and that's a really, really bad analogy, but the premise stands, so.
Yeah, and in some situations that those metrics or KPIs, either we or the client thinks drives their business, it's really interesting on certain KPIs that turn out to be like we're just wrong and we need to change those KPIs. We have some examples where we thought business intuitively, the commodity prices related to that business would drive better success, but they were actually showing there was more correlation actually when there was volatility to positively to their both their revenue and net income than just having high commodity prices. So we can't be afraid to just switch up what's important or what's driving it, and at least that was illustrative in that case, so there's some value gain there.
And I would say too, building on the comment that was made, more is not better. Right? You don't need 97 different KPIs. If you have 187 dashboards, it probably means that you don't know what your strategic plan is. You need to be able to ascertain what are the goals and objectives I have as an organization, financially, operationally, culturally, strategically. Once you understand those, you go, okay, what are the metrics I actually want to look at that enable and drive those outcomes? It's not give me all my metrics and let me see what happens. So there is a strategic element to this for sure before you get into all the data pieces around that. I feel like I'm saying data way too often, but that's typical for my presentations. So, any other questions or comments with regards to this slide? Or any struggles anybody's having specifically? If not, we'll jump into some slides on framework and case studies. So this is a very busy slide, but I like to speak to it regardless. So we talk about, as an organization, how do you work through that maturity curve? How do we work through that maturity curve if I'm saying maybe right now the only thing that you're getting is a quarterly or monthly financial statement and 5 or 6 KPIs? How do we drive growth? How do we drive some strategic objectives? And so really what we looked at here is this maturity framework from tactical outcomes to strategic outcomes. And really, we look at that in prototypically 5 stages. And this isn't a slide that's specific to MNP by any stretch of the imagination. You'll see this slide from everybody from Microsoft, et cetera, because it's a fairly standardized framework. But the premise is the same. So really where you start is this question around what happened, right? On a monthly basis, I'm gonna look back on my monthly financials and I'm gonna understand what happened. I know what my revenue is, I know what my expenses are, I know what I made as far as profitability goes. But realistically, again, that's a compliance exercise. That's table stakes. You're not getting anything that's really gonna help you make decisions. The next thing is how it happened. And this is where we shift into that kind of insights perspective. So it's one thing to say, okay, well, this is what happened to my cost structure in a given month or a given year. The next step of it is how did that happen? And you start to get into some of those proactive insights. The third one is around what will happen. And this is, again, that inflection where we saw the previous slide, there was those 4 boxes around strategic advice being the final piece. This is where you start to edge into some of that, and that's really what will happen. And so I know what Cam does a lot with our clients is spend time doing strategic planning or scenario planning. So if this, what's the outcome? And what that also allows you to do is start to run multiple different scenarios at the same time. We found a ton of this happening, during COVID. So when COVID hit, I remember, almost every client would come to us and say, what happens if this, right? So now all of a sudden my sales go down 80%. How do I deal with this? How can I manage capital? How can I cut my costs? How can I manage any fixed costs and overhead that I have? You're able to scenario plan those really quickly. Saw the same thing during some of the tariff conversations that are happening right now. Saw the same thing 2 years ago, 3 years ago when interest rates were really spiking. So you go through these fluctuations that are kind of macro or externalities. And having that ability to say what will happen and being able to do it quickly is hugely, hugely valuable. The fourth one is what should we do? So now you're starting to talk about strategy rather than finance. The finance is going to support the strategy. And so, we know we need to do X. Now, how do we go about doing that? And then the final piece is repeatability. And this really gets into saying, how do I become extremely proactive in everything that we do? So again, data-enabled, making data-enabled strategic decisions at a financial level is really that final piece. And that views the finance function as much more strategic than I think a lot of people would traditionally view it as.
And I think to that point, that's probably the most exciting point or aspect to me is those, the machine learning and AI processes are now available to almost every business, whereas, a couple years ago, it was probably 100,000 to 200,000 engagements that just weren't accessible to small and mid-sized businesses. So you only saw that in, large cap pubcos and things like that. So for everyone to have access to that decision making is really cool. And we see that with our clients all the time. All right, so key trends. We'll talk about the first 2 and leave the hard stuff for Colin. So we'll optimize working capital. We see this all the time. There's lots of great businesses out there. They just don't necessarily know or are prepared to adapt to working capital changes, and we see stresses in their financials, whether it's just simple as payroll if they've gone through expansion and they can't get the lending they need from the bank, that sort of thing. So we work with or spend a lot of time using these tools just to predict and forecast working capital needs. Mostly when things are going really well in the business, they expand or you need more working capital, but also there's downturns and that sort of thing, and you're stressed with fixed cost and expenditures like that. And then data strategy. So coming up with a strategy and as Colin alluded to, not having 97 KPIs and not really just having a whole bunch of noise in your general finance strategy, to really dial in what's important to you and what's important to your team and the stakeholders, and just measure that and grow from there.
I'm going to digress for a little bit because I realized I forgot something that I thought would be important. I had a mentor very early on in my career. She was the CEO of an organization that I worked with right at the onset. And I was very early, this was the days when things like Power BI didn't even exist. I'm giving away my age, but we were still doing stuff in Excel. So you're doing all your dashboards in Excel. And we were creating this myriad of metrics, and she would cut and paste specific things for specific leaders. And I remember asking her, I said, Wendy, why are you doing this? And she goes, at the end of the day, and I don't know if this is her statement or she's borrowed it from somebody else, but she goes, transparency drives accountability and accountability drive results. And that's something that stuck with me for 20 some years, because I think when we talk about kind of financial management, when we talk about data strategy, when we talk about some of these metrics and KPIs, really what you're trying to drive is accountability and results. All you're creating is the transparency level to a degree, to be able to inform some of the rest of the pieces. So anyways, that's my digression for the afternoon. But data strategy, I'm just gonna jump in as well, building on what Cam said, is I do a lot of work with data and AI and those sorts of things across organizations. And I would say, and this is, I think, surprising to a lot of people, probably between 70 and 75% of the use cases that are identified for a lot of these tools are financially driven. Or driven through the finance organization. I'd say on the AI side, it's probably well in excess of 75%. So it typically reinforces that the financial side of the equation is A, foundationally important, but B, also ripe for a lot of transformation as far as it comes to insights and strategy and those sorts of things. So just a bit of a context there, or some additional context there. What we're also seeing, and this is just an interesting note, is in the past, everybody had dashboards, so the future of BI is now basically natural language processing. So we're seeing a lot of clients that are now at a place where I don't want to open my dashboard and look at your 17 metrics. Let me just type in a question. And that's not as complicated as it was a year ago or even 2 years ago. It's relatively straightforward to do. In fact, we're working with a lot of kind of mid-sized companies around this right now, where the CEO goes, I want to open, in the past, I'd open up my dashboard and I'd spend 20 minutes in the morning going through my dashboard. Now I want to be able to open it up and type in how many hot dogs did we sell yesterday, and just have it tell me. And so that's something that we're seeing a lot of, and it allows us to be a lot more pointed in some of our metrics. And then the last one is the replacement of Excel. I think, again, not surprising here, Excel tends to be the tool that everything is built on at a foundational level, and you're starting to see a massive shift away from that for obvious reasons. There's a lot of risks in financial models. I may or may not have been in trouble with that very early in my career when I missed a zero, and was called into the CFO's office. But you see that a lot, and we're basically, with a lot of the newer tools and models, you're able to evolve past those risks. I won't spend a lot of time here. This is just more a slide for general interest, and then we'll spend a bit of time jumping into some of the more detailed case studies. So again, data quality, garbage in, garbage out. That is foundational regardless of what tool sets you're using. It could be Excel, it could be AI. The premise is identical. Data governance, I won't touch on that a lot, but typically organizations don't see finance as being a member of data governance or a driver of data governance. I'm going to beg to differ. It is usually one of the most, if not the most important role inside of that. One big area, and I know this was a part of the discussion earlier around where do I prioritize and where do I focus, is when we work with organizations a lot, it's identifying the really high value, quickly executable use cases. Where we see organizations obviously struggle a lot of times is these, what we call science fair projects. I have this idea that's really interesting and really cool, and we end up throwing a lot of resources at that project with we're never really seeing the return on investment there. So we try to avoid that. And then the right-hand side I won't delve into. If you're ever interested in chatting about AI from a financial perspective, I'm obviously here tomorrow and for the rest of today, so always happy to dive into that a little bit more, but really, again, focusing on the priorities there.
All right, so art of the possible. So what, some of the scenarios we wanted to go through that we have seen through and worked on, and then hopefully we have some time to talk about some scenarios that you may want to talk about. So the first one, this is a group I worked with. So situation was a home builder. They had every data point you could possibly imagine relevant to them. They had it in all, 4 or 5 different spreadsheets, and they were using it fairly fairly well. However, it took massive amounts of time every month to aggregate it all together and make it mean anything to them. So they wanted us to kind of consolidate and aggregate the data and get it to them a lot quicker and probably a lot more reliably. So like I said, the solution was was integrating all of the different data points, built this in Power BI. And by the end of it, it was really interesting to see they had an idea on which home models were profitable, but they did see differences between communities of similar home styles. So through this, they did actually reallocate capital in their product mix or their show homes. But probably more importantly to them, they reallocated time within their management team. So this was not a large cost engagement, and it resulted in really, it was pretty interesting, cool output and dashboard. Let's see.
I think just to add to that too, and if it's who I'm thinking it is, I think a big part of that too was what was outlined a few times as part of the earlier questions and conversations. It was a focus on the priorities, right? Rather than saying, I want to look at every possible metric under the sun, what are those key kind of strategic elements I want to better understand around my cost structure and around kind of the client geography, or customer, in this case, customer geography. Once you're able to understand and say, those are kind of the strategic drivers we want to work through, how do we find the KPIs that are going to help us measure and manage that, rather than just saying, give me 17 dashboards to take a look at and I'll figure out which ones I think are relevant. So again, a refinement of the priorities to drive some of that. This one was interesting. So this is a growth phase manufacturing company we're working with out of Saskatchewan. Really strong M&A ambitions. So they were going through a massive kind of growth trajectory, if you want to look at it that way. They had multiple entities, a significant degree of variable rate debt as part of those acquisitions. So as they're working through their M&A strategy and their growth strategy, there were a lot of covenants around their debt as well. So as the whole tariff conversation got started, they were heavily impacted by that as well. So you're in a variable interest rate environment. You're impacted by what seemingly are tariff rate changes every morning when you wake up, and you're going through a large degree of merger and acquisition activity and growth strategy. So what we did with them, if you want to just grab the next button, that'd be much appreciated. We basically sat down really quickly, and we grabbed a bunch of data from their ERP, which is kind of all their transactional financial information. We grabbed some data from some external sources. So this was data with regards to interest rates, tariffs, general client information or customer information, and we modeled this out really quickly. The interesting thing about this is that the models on the right are generic. So as an example, and plugging M&P for a second, these are all pre-built. We have these all built. And basically what we allow people to do is kind of go in and say, put all your transactional information into this robust model and it'll give you the output. So what it allowed us to do was really quickly model the impact of tariffs on specific segments of their business or specific subsidiaries, as well as model out things like changes to cost of sales, interest rate changes, liquidity issues, things like that. So really got us to a place where we were able to kind of help them and support them in driving some of those value conversations from a strategic perspective. It actually ended up making some differences around what they were going to do at an entity-specific level, and some of their M&A activity they actually took off the table from a risk management perspective. So it really, again, became a driver to the bigger picture strategy for the organization. This one's just fun. So this one I'm going to touch on because this is one I actually got to be pretty hands-on, which was for me interesting. Financial services company that was looking for a way, as part of their client advisory meetings, to just provide clients with a lot of general KPIs, insights, what's happening in the industry, and they had clients across hundreds of different industries. So what we essentially did, and this sounds like it was a big lift, but it actually took less than 8 weeks, is we basically downloaded about 90,000 pages worth of documentation from a multitude of different data sources. So looking at vendors that provide market research reports, looking at Statistics Canada, looking at other reports like that. And we built it into what's called a RAG model, which for lack of a better term is an AI model. It's a large language model. And we built it privately. And then if you click the next button, what it essentially did is it created a front-end interface that allows them to ask any question that for the industry that their customer is in. So in this case, it was a machine shop company, just as an example. And it's just what drives demand? And it would give them like a large language model response. You could ask it, what's the current ratio of typical companies in this industry? Or what are some of the M&A trends that you see in this industry, and it would basically grab 90,000 pages of information, synthesize that down to a paragraph or two, and then provide that within about 4 to 6 seconds for a customer. And so it really helped them on the customer service side, but then what they ended up starting to do it is they looked at it even from an internal perspective for themselves. And so these are the simple, easy tools that you can create from an AI perspective that 3-4 years ago were massively cost prohibitive. With the changes in technology now, they're no longer cost prohibitive. So again, just an interesting use case that's a little different than what we would typically see. This one's me again, isn't it? So this is maybe not the best example for this setting, but large multinational construction company. So what they would do is they'd go into these projects, but I would argue that this doesn't pertain specifically to a large multinational, is trying to define the risk premium for a lot of their projects was a huge undertaking. So it would take them 3 weeks of research and analysis to go through various projects and tools and what they've done in the past, and market factors like your risk-free rate and things like that. And it became very, very difficult. And so what we did with them is basically incorporated like a modern data platform. Again, historically, these are seen as these massive projects. What you're seeing now is the democratization of a lot of these tools and a lot of these capabilities. And so again, this wasn't more than a 3 or 4 month project, which sounds big, but we basically integrated all their systems, and what used to take them 3 to 4 weeks took them about 10 minutes. So they would basically look up, manage all the risk premiums for their projects, understand all of that, and gave them a data model to work through all that in the future. But again, this goes back to the concept. They had a strategy as to what the outcome they were looking for. I need to answer this problem, I need to solve this problem, I need to get to this outcome. And then the data became the enabler to get to that. It wasn't just, let's integrate our data and see what happens. So again, really focused on an outcome.
Yeah, of course. I feel like a lot of this presupposes that you've got good data, right? And the collection of data is such that it's not garbage in. So when you guys start a mandate, how often do you have to go back to starting with the data collection and getting it into a format like an ERP or even set up the Power BI for organizations?
It's a great question. Almost always. Really, at the end of the day, we typically go through an exercise, or organizations will go through that kind of data governance. And I know data governance is seen as this, massive project, which it sometimes is. But at the end of the day, we oftentimes will focus on very specific areas of your data. So we have an organization, actually, Jamie Mills, who's sitting behind you from MMP, worked with me on this engagement. We had a big company out of Saskatchewan that had massive projects where they would manage all the projects in Excel. And so from a simplicity perspective, we just loaded all that Excel data into a single data repository and went from there. And then it helped us pretty quickly outline data gaps, consistency gaps, things like that. And so that is, the data has to go back and change the process, and then kind of do a bit of process engineering and then drive that forward. But yeah, it's a great question, and it always happens.
Real simple, and in that one case study with the home builder, it's an industry-driven, entirely off of square foot metrics, so profitability per square foot, revenue per square foot, and on and on. But we had to we spent a lot of time making sure that the costs, or the numbers going into those square foot numbers, were consistent and fair across the board, which they weren't necessarily. So yeah, that was a big part of that, to just make sure that what we're telling them is true, or what the dashboard's telling them is true, is a large part of that, of pretty much every engagement.
Yeah, and pulling together the data oftentimes identifies where the gaps are, because it's hard to understand until you see them all together. So you'd see a specific project financial summary, and on its own you go, that doesn't seem right, but I can't really tell. And then you put them all next to each other and you look at it and you go, well, that one's obviously the outlier. So unless we can understand and explain why it's the outlier, then we probably need to go back and reassess that process. I know we're up against it, so do you want to start this and I can jump in?
Yeah, so this slide's really to get the discussion going, but we've already had a lot of great discussions, so thank you for that. This makes these things way more valuable and way more, honestly, fun for Colin and I than just to show you the slides that we put together. So if anyone has any priority use cases or identified those, do you want to start there?
I was going to say, the one suggestion I would have is Always start from a business perspective, never start from a technology perspective. That's kind of step one, and that is the overarching mantra. The other piece is this is nowhere near as intimidating and as gargantuan as people often think it is, especially now. It's very different than it was 15 years ago as somebody who's been in the space for a long time. So step one, make sure you have a business-driven strategic initiative and then use the data to enable that rather than saying, I just need data. Two is define what your data strategy is, and this goes back to things like data consistency and insight consistency. And then the third one is just pilot, get started. Oftentimes those are very simple, very quick, 6, 7, 8 week use cases to get you the insights you need from a strategic level in finance to be able to make some of those strategic decisions, to be nimble, to be agile. One of the things I really love working about with high growth companies or organizations that are really kind of catalyzing themselves is there's this nimbleness to them and this willingness to change and this willingness to adapt and willingness to rethink your business model or refine your business model, for lack of a better term. And that's where this fits perfectly, because you can use a lot of those insights to refine your business model over time, adapt to macroeconomic changes, adapt to industry changes. And so that's the piece that we oftentimes think of these tools as being very effective for massive organizations. I would actually argue it's the antithesis of that. The more nimble and agile you are as an organization, the more value this holds, because it allows you to draw that parallel into your strategy. So with that, maybe we'll open up for any other questions or concerns.
Thank you for a great chat, by the way. Do you ever run into situations where clients are trying to overcomplicate the way they read data? And what's your strategy to bring them back and give them a simpler solution?
Give them more spreadsheets.
It's a good point, because that happens a lot. And again, it goes back to this idea that you're trying to boil the ocean, you're trying to do everything. And that goes, typically when we do these sorts of projects with financial groups, we say start with a proof of concept or a proof of value. It enables the return on investment. So when you're looking at saying, hey, I'm in a capitally constrained environment, I have the ability to do this, but I can do it with a finite capital investment. Where organizations oftentimes get in trouble is exactly what you're saying, is this idea that I need to do everything at once. I need to be able to answer every question. I need to have everything integrated. I need every KPI. So yeah, the big thing, again, it goes back down to no science fair projects and be very, very pointed as far as it relates to the proof of value that you want to create. Yeah. Len? Oh, here, I'll give you.
Hey, so I'm still missing something. There's a dot I'm not connecting. And maybe it's just me. Lots about speed. How does this help me scale?
I would argue it's more about scale than speed. I'm going to invert that. If you're looking to scale as an organization, you have a finite degree of resources as an organization, as any organization, but especially as a high growth organization. Where do you point those resources? And that goes back to that proof of value. What are the strategic decisions I want to make as an organization? I.e., do I want to invest in this new geography? Do I want to invest in this new product or this new capability or this new service? Do I need to focus on paying down debt and managing my liquidity? I think those things are all related to scale more than they are to speed. And so I say when you talk about financial intelligence or business intelligence or even use cases around AI, is intended to enable those specific questions, right? Or answers to those specific questions, I would say. So yes, speed is a factor for sure. Being able to answer questions around the impact of tariffs, interest rate changes, suppliers, overseas impacts, externalities of all sorts and kinds, that's absolutely a function of speed, and this will help that. But I would argue the scale comes first and has to come first, and this is actually intended to drive that.
Yeah, and one thing to clarify on speed is usually what we're talking about there is automation. So eliminating the labor hours going into getting that data output from the data input. So the speed isn't the output or isn't the goal. It's just the reliability and a better reporting system.
And I think that goes back to the comment I made at the onset, is when we think of like financial intelligence, those sorts of things, everybody's natural inclination is to say this goes for the massive multinational enterprises. I actually would argue the opposite. I think these sorts of tools, these sorts of capabilities enable high growth more than, traditional organizations, because again, there's a willingness to change, there's a willingness to adapt, there's a nimbleness and an agility. And as mentioned in the previous chat, there's a bit more empathy around change too, I find. And I think that's foundationally important to making this valuable.
You've made reference to the changing technology and AI and those sorts of things. Have the big sort of ERP systems like NetSuite, for example, have they kept up with that changing technology? Or would an organization like yours come in and take a NetSuite and add the new technology on top of that to give it a booster sort of thing?
That's a really good question. There isn't a one-size-fits-all, but what we have found prototypically is when you have really big ERP systems out there, it's difficult for them to adapt at the rate of change that's happening. It's just a function of what's happening in the industry. What we typically do is we'll find what we call a hub and a spoke model. So we'll create a data hub in the middle with just kind of take all your data from the organization, from your ERP, from external sources, from project plans, from your human capital system, put it all into one place so you can identify and have one version of the truth. Not to say, well, my ERP says this, but if I go over to this financial statement that I built over here, it says something different. And I've been in plenty of meetings where you have two executives show up in the same room with the same KPI and different outcomes. And so what you try to avoid is saying, what's that one version of the truth? And then, without getting too far ahead, if you're looking to enable things like AI, you need that data layer. And you need that place or that hub in the middle where basically you're able to run all those models or all the predictive analytics. Rarely are you gonna, at a strategic level, run finance with only data from your ERP. That's really difficult, right? You're gonna want insights into, you had mentioned you're grabbing data around culture. That's important. That plays a role in finance for sure. Same thing with anything from an external data perspective. I wanna go grab data from Equifax or Statistics Canada. It would be the same premise. Yeah.
I just have a question around like the details now. So, you get a new client, they're scaling up. What's the typical approach to kick off that engagement?
So typically we do like a discovery session, and the discovery session is more consultative than anything else. It ends up being a very dynamic workshop, and really what that comes down to is going through what are your primary use cases and what are the requirements for those primary use cases. We'll look at that and say, okay, we always go crawl, walk, run. Start with the crawl. You can't run right away. And so if we can start with the crawl, say, give me one or two use cases, give me the requirements for those use cases, and then we'll kind of create a scalable foundation. That's typically where we start, because you're basically investing in the right areas to begin with, but the organization sees the value without having to make these monolithic investments that you'd have if you just went right to, I need to start running, because that's just not realistic for most organizations, well, for any organization. I don't know if there's anything you want to add to that.
Fantastic. Well, thank you so much, Colin and Cam, for providing those insights. Appreciation from the crowd. Some applause. And we've got a little bit of a thank you gift for coming and spending some time with us at Scale Up. So thank you very much.